Okay, now we're going to talk about the second volume indicator that I use, and that is unbalanced volume. Now, unbalanced volume is a very, very common volume indicator, maybe the most common one. And there's been all kinds of variations that have been created on it, as well as all kinds of fancy schmancy stuff done with volume. And I'll tell you, I've looked at all of that. I've gone to lectures and classes about unbalanced volume. I've heard people trash unbalanced volume, say that the formula is inherently faulty, all kinds of stuff. But I gotta tell you, after I listen to all that stuff and I go and try all these other newfangled volume indicators, I just keep coming back to OBV. It's not a huge part of my trading decision, but I find it to be as good as any of the volume indicators. I really do. And so I like the fact that, one of my basic philosophies is I'm not a big believer in a lot of proprietary indicators. I don't think you need them. I don't think anybody's creating any huge profits by creating some big magical indicator. And so therefore I prefer to just use standard indicators, stochastics, MACD, regular old moving averages, and unbalanced volume. They do as well as anything else. So anyway, as far as volume indicator goes, we use OBV. Now, how do we use it? It's pretty simple, What we're doing is we're just, by the way, let's talk a little bit about how it is calculated, first of all, just so you understand how this functions. It's in the manual, but it's pretty simple. When a stock closes higher than the previous day, OBV adds that volume to the equation. When a stock closes lower than the previous day, then it subtracts that volume from the equation. So it's the number that it adds or subtracts will be different because it literally will be the volume number of that day. One other thing while we're on this topic that I should point out that I know has been an issue with some people sometimes. Let's see here. Here's one. Okay, so let's look at this bar right here. Okay, see where I've got my crosshairs? That little narrow range spinning top type bar. Now if you look down at the volume histogram, and note whether it's green or red. Okay, it is a green volume bar. Now, sometimes people get confused by that. They say, wait a minute, how come the candlestick is red, meaning that it closed below the open, but the volume bar is green? Isn't the volume bar supposed to be red since the candlestick is red? And the answer to that question is no. Because the way that this is color coding here is it will give a green bar on volume if this bar's, the corresponding price bar's close is not above the open of that bar, but it's above the close of the previous bar. So it's referencing the previous bar. So therefore, it can be a different color than the candlestick. Because the candlestick, it turns red if the close of that bar is below the open of that bar. Volume isn't doing that. It is creating a red bar if the close is below the close of the previous bar. But it'll create a green bar on volume if the close is above the close of the previous bar. So you can see that the previous bar closed down here and this bar closed up here. Therefore, it closed higher than the previous bar. Therefore, it creates a green volume bar. Okay, so I wanted to point that out because I know that that's a question that's come up before, and also because that's how OBV works, unbalanced volume. It is not talking about whether the stock or the future, whatever the market is, closed higher or lower than the open of that bar, but it is talking about whether the price has closed higher or lower than the previous day's bar, or the previous bar, whatever it happens to be, whatever the time frame is. Okay, so a little distinction there that applies to both the histogram and to OBV. All right, now that we've established that, basically all I'm looking for is kind of the big picture. This, as you can see, unbalanced volume, which is this black, really thick black line here, it's very wiggly, very jagged, and so therefore I don't really draw, real strict trend lines on it because it's just not quite that accurate of an indicator. So we're looking for more of the bigger directional pattern. So it will go, here's the issue, it will go down if there is more volume on bars closing lower than the previous bar's close. It will go up if there's more volume on bars that close above the previous bar's close. So it's just another way. Now, it's very similar to the volume histogram in that calculation, except it's not just counting per bar, it's actually creating these trends, if you will. And that's probably the best way to look at it. I'm looking at the overall trend of unbalanced volume. So right now, this trend is down. Okay, so while this trend on OBV is down, 50 MA basically is flat, and I'm not going to be too excited about taking, cycle lows here, taking longs, because the volume is actually greater when price is closing below the previous closes. So volume is not supporting longs. I would rather go short, well, this indicator at least. Again, it's only one indicator, and again, one indicator, including this one, is perfectly meaningless. It's only when it aligns with other energies that we give it any meaning whatsoever, but we look at it to see whether it does align and confirm, or whether it diverges from the other energies. So we see this going down. Now here we see a bit of consolidation going on unbalanced volume. We see this thing flattening out, and then we see this thing going back up. So now we're more interested in long. So basically, based on just this indicator, again, we wouldn't trade just on this indicator, but based on this indicator, I'm more interested in shorts here, I'm more interested in longs here. Okay? But again, the truth is, this whole time, 50 MA is pretty much going nowhere. It's pretty flat. And we're above, below, we're above, it's splitting the 50 MA. And so this is just one indication, and it's not really coinciding with these other energies. Okay, let's move on forward here and see what else see what else we find. So now we get this thing trending back down, pretty much trends down this whole way here. So now it's closed back down below the 50 MA again. 50 MA, by the time we get our cycle highs here, 50 MA is flat again. So that's a first retrace after the cross, second retrace after the cross. These are not retraces in the trend. And so, again, we're going to be less likely to take these trades, but at least we can say on balance volume is supporting the shorts. And, you know, if you took this short, you might be okay. This support here holds. We'll put in a spike bottom reversal bar, big volume spike in volume, which marks that cycle low, and then that's all that happens there. So this market really, for months, is pretty noisy, not really doing a whole heck of a lot. And now, unbalanced volume pretty much goes sideways. Again, it comes back up. Unbalanced volume here, I would say, is doing nothing. Okay, now we get a nice little uptrend. So this, we might actually say, you know what, I might try this one. 50 MA starting to angle up a little bit. We get this is pretty much a first retrace in a trend, because here it's flat. So there's your first retrace in a trend trade. Unbalanced volume is making higher highs, higher lows. So we're getting an uptrend there. That's supporting it. It gets up to this previous high. And even this one, okay, this is still all first retrace in a trend because we don't significantly break this high. But even this one we might try. And unbalanced volume supports it. And it doesn't work. It does not make higher highs. Any clue as to why that would be? Well, still volume, see this is the key, is that unbalanced volume is going to give you these trend lines. What it doesn't do is it doesn't really tell you how much volume is going through. In other words, it's not telling you if this volume is big, little, or average. If it's above average, below average, just doesn't give you that information. Okay, it's basically an indicator that's giving you relative volume based on price action, up or down price action. So we still need to consult with our volume histogram. Now our volume histogram and moving average, the volume is puny, and it has stayed puny this whole time. It just is not going anywhere, and it is minuscule. So don't trade on balance volume alone. This will give you the relative action of volume and price interacting together. But then it's not a replacement for your volume histogram. Then you have to go down and look at your volume histogram and say, okay, so there's more volume on the up moves than the down moves, but how much volume, how much strength? And see, let me clean up our chart a little bit. The volume is just ridiculously puny. There's no strength here. There's, 30,000 or 30 million. But comparatively, look what we had over here. When we got a real move, look how high we got. Okay, when price really moved. Now this stock really hasn't been moving a whole heck of a lot anyway. But here it gets a little bit above, a little bit above. Here we get a little volume spike. And again, here it gets stuck. See, this is the thing. When it gets stuck in these moving averages, then the volume just stays right around the average. Okay, we get a little trend going. We get some spikes above the average. Okay, a little bit there. Gotta adjust our scale here. Okay. All right, so we looked at all of this. Let's look at where we are right now. And as you can see, this action here, well, let's scale this down too. This shows a significant change here. It's kind of sideways here. Here we have a nice little drop that coincides with this. And but then after this big move down, we get a little spike volume here that's more than 50% above the moving average line, but then it just goes sideways again. And volume histogram stays average or even below average. Most of the time it's even below average. And so again, volume not really doing that great. You would get a little bit of a spike, maybe that's about 50% higher, to mark another low, but on balance volume not really showing too much, except again on this down move you're getting some volume increase. That's actually a good point here. That's a very good point, because we've got that in two places here. So let me point this out, because this is an area where unbalanced volume can get a little tricky. Let me clean up this chart. When you get these kind of exhaustion volume patterns that mark cycle lows, what will happen is normally unbalanced volume will take a dive. So it's very important to, again, look at your volume histogram to interpret unbalanced volume and not get dissuaded by a misinterpretation of that. So now that you know about exhaustion patterns with volume that mark cycle lows, it only makes sense. Knowing how unbalanced volume is calculated, you're getting more volume coming in, increase in volume, as price is closing lower. So that's going to drive this indicator down. But you need to watch your volume histogram to then ask, wait a minute, is this simply a volume spike low? And again, you also get a nice candlestick reversal pattern here. If so, oh, that's the reason this formula is driving it down. Therefore, I am not concerned about this move down in OBV. I just discount it and say, okay, well, that's just how the formula works, but this is a volume spike reversal pattern. And when I say reversal, I don't mean a reversal of trend. I just mean really it's a cycle bottom. And then the market's going to reverse back up and put in a cycle high. But you notice, as I was saying, really all we're getting with OBV is flat and flat. So OBV is telling us nothing here. It's not helping at all. Then again, we get this move down where the bars are all closing lower, and a volume increase, and so that drives this down again. Okay, so it's one of those nuances. All indicators is very important. People don't put the time in. They oversimplify how to read indicators, and that's a huge mistake. All indicators have their little nuances and idiosyncrasies because all they are is mathematical formulas. So to think that any mathematical formula is going to tell you how to make money in the market on every bar is ridiculous, or even every cycle high and low. There's going to be times when it's going to be, misleading because something's happening that just happens to tie in with the mathematical calculation, but this is where you need to be looking at more than one thing to really understand, okay, I understand how this indicator works, and therefore watching volume, watching my candlestick patterns, my lows, again, that's a very nice candlestick pattern there. OBV is just driving down because I'm getting these cycle bottom patterns, that's it. Okay, let's look at another stock because frankly AT&T is not one of the better ones lately. We've had the volume patterns here have just been very even keeled. Let's find one that produces a little more dynamic volume pattern. Okay, here's eBay, and with eBay we definitely get much more of a dynamic volume pattern. So in here volume is pretty average, and then as price comes above the 50 MA, we get a little increase in volume here, 50%, maybe even 100% above the moving average. So this is showing some strength here. So this is good. 50 MA is still flat. Okay. So now we're kind of excited and we say, oh, this is a beautiful thing. I've got a mini divergence pattern here. I've got an increase in volume here. As this retraces, this volume is going back down, gets back down below the moving average. Yeah, I'm liking this, And as we look at unbalanced volume, we've started a trend here, so that's following the trend of that. That's good. On the retrace, it kind of comes down a little bit. That's okay. That's normal. It holds the 15 EMA, which is important. We don't want to see this retrace go down too much, but it's, it's holding in here pretty well. So we get in, and bada bing, bada boom, we go back up, and we get another move up here on OBV. So again, just for confirmation purposes, pretty good. It's all right. Volume stays pretty even keeled, and then we get a nice spike here, and we get a gap up. Okay, it's looking good. Let's look at the big picture over here now. So we get our trend going. Okay, this part's kind of sideways, low volume, and the market doesn't really, take off until we get this volume spike here, boom, and then it's off to the races. And that's the real catalyst, is this volume. Whoever came in there, somebody came in and started buying up some major shares. See, before that, nah. And what this represents generally when you get this little kind of stuff, it's just retailers and so forth. So that's meaningless, the losers. There can be some professional buying in there too, by the way. It could just be little small positions that they take. But eventually they got to get some bigger positions in there because they got a lot of shares they need to buy. And that's going to show up as volume spikes. And there it is. Bam. As soon as that happens, OBV takes off. So once we see that, if we got in back here, that's just confirmation that, okay, let's let this puppy run. So it runs, it runs, it runs. Now, let's look at the other side. We get into a pretty nice trend here, and we put in basically a triple top at a nice cycle high. Volume stays pretty average. It's low. It's very low, which is worrisome, but it is average. It's just that the average has gone down so low. But now, look what happens. Boom. We get a pretty dramatic lower high in OBV. So that is telling us what? Well, there's more volume on the down moves than the up moves now. But it's not showing up in price yet. So again, here's where OBV can sometimes lead the market. None of this stuff, you know, when we talk about leading indicators, nothing always leads the market. In fact, nothing leads the market even most of the time. Once in a while, something will show up as a leading indicator. And that's about it, you know. But that's enough. That's enough. That's enough to make money with. So that's a beautiful thing right there, and especially because we're in an extended trend, cycle high. And on this OBV, I like to see it be a very, very clear, the more dramatic shift in downtrend, the better. I want to see this pretty dramatic. I don't want it to be close. I want that to be a very dramatic shift at these highs for me to take a reversal trade on that. But again, this is another thing that can help increase the odds of your reversal trades, is looking for this shift in OBV before it shows up in price. And again, these reversal trades, you know, when they work, they can be very, very powerful. This one worked great. And as you can see, it worked really great because we had a nice big gap down here, and then it still made lower lows, lower lows, lower lows. I mean, boom. Price pretty much dropped in half in a fairly short period of time, just a few months. Okay, so that's unbalanced volume, and it can be a very good supplemental indicator when used along with your volume histogram and all your other indicators.